Well, hi everyone, and welcome to the Buffett and Beyond weekly ETF video letter for Saturday, December 16th, 2023. And yeah, we're halfway through the month already, folks. Our ETF top stocks in the QQQs are up 94.5%. Folks, we've never had 100% gain in a portfolio in any one year. And maybe this will be the year to do, because we've got 2 weeks to go and the market is on a rocket ship just blasting out into space. And remember, folks, if you want to walk on this beautiful beach at sunrise like Jimmy Buffett once did, then you've got to learn how to invest even better than Warren Buffett does now. And let us look at the QQQs. Now, we have the top stocks in our QQQs, and there's a dozen of them. So remember, our whole strategy is that we can take any index, any ETF, any mutual fund, and if we pick the better than average stocks and let somebody else buy the below average stocks, we can always outperform that mutual fund, that ETF, that index. And folks, it only makes common sense. The problem is, which are the better half? And that's what our clean surplus methodology is all about. And I'll end that right there, because let us look at this portfolio as of yesterday, and that's halfway through the month on the 15th of December. The QQQs were up 52.2%, with the S&P have another roaring comeback this year of 22.9%. So the S&P is just about a little bit more than what it lost last year. So we're getting there, folks. Anyway, so for the top 5 stock, or the top 12 stocks in the ETF that we picked, 94%. Yeah, they're up 94.5%. They're up almost double the QQQ itself. So, folks, it just goes to show that if you pick the best stocks in any ETF, any index, any mutual fund, you are going to outperform, because it just makes sense that you're picking the better half or the better part of that index. Now, if you were long and short, in other words, if you were long these stocks and short the ETF, which means you were in a very, very good hedged position, you'd be up 42.3%. So being hedged, being long and short, you'd be up 42%. And folks, the question has been, why are we hedging now, why we didn't 5 years ago or 10 years ago? And that's because the markets have come out with better hedging techniques in order to go short, or they've come out with more liquidity in all of those securities, so that we can hedge much, much better than we have in the past. So every year it gets better and better. Anyway, back to this. QQQ is up 52%, more than doubling the S&P, and our top stocks, our top dozen stocks in this ETF, up 94.5%. And folks, we're trying to go to 100%. We've never had a 100% portfolio, or a portfolio that broke 100% in any one year. Now, let's look at those stocks in against the S&P 500. S&P 500 is the black line down here, and you can see that every stock, with the exception of one, has outperformed the S&P by almost double, and in some cases triple. Well, with the S&P up 22% in here, and actually this is a 1 year chart, so it's up a little bit more than 22% over 1 year. Every stock has outperformed. Year to date, Fortinet down here actually has outperformed the S&P by just a little bit. So anyway, look at the stocks. Yeah, they're doing great. Much, much better than the S&P. Much, much better than double the ETF itself. So let us look at a few things that I've been getting a lot of questions at. First of all, let's look at year-to-date S&P black line against the semiconductors, which is the XSD, which is the blue line. And we can see the blue line has had a decline in here and is coming roaring back. Now up here, we have the QQQs, which is this reddish line in here, and above that, the XLK, which is the technology ETF. What I'm looking at, and what the question that we're going to answer is, what about the QQQs, the XSD, and the XLK? Can we construct one portfolio rather than having 3 portfolios? So let's look at the technology ETF, up 54%. The top 5 stocks up 67.9%. This is year to date now. So, okay, we're looking at the technology blasting away, no problem. What about the semiconductor? Up 34% year to date. But the top 5 stocks, and we changed one stock in here, which exchanged the MXL and added another stock in there, and those stocks are now up 78%. That's counting the loss in the one stock that we sold or we changed. So again, the semiconductors up 34%, and the top 5 stocks up more than double that, up 78%. And if you were hedged, in other words, just about totally hedged, where you short the ETF and long the top stocks, because the top stocks almost always outperform over the long term. And I say almost because we have not found one or a group of stocks that have not outperformed, but I'm sure there's one out there. There's thousands and thousands of ETFs. So that's why I say almost always outperforms. But all the ones we've done research on, which are hundreds, have outperformed if you pick the best top stocks in there. And of course, we use our computer program to do that. So let's look at if we constructed one portfolio out of the QQQ, the top stocks in the QQQs, top stocks in the XSD, and the XLK, because between the XLK and the XSD, the top 5 or 6 stocks, 3 of them are duplicated in these 2 portfolios. So if we look at the 3 and say, okay, what if we constructed one portfolio, so we just hedge one portfolio, it would make life easier for all of you, and it would give more work for us because we have to put those stocks together in the proper order. But that's the question that is being asked from you subscribers out there and you investors out there, is that, gee, give us one portfolio so we can buy it and then let your money managers hedge it. So let's look at something here. What if we took the average of the top stocks in these 3 ETFs? In other words, technology, semiconductors, and the QQQs, which are the top stocks or the top largest stocks in the NASDAQ 100. The QQQs are the NASDAQ 100. If we had those stocks that I just showed you, the top stocks would have this year, if we averaged them all out, top stocks would be performing or returning 80.4%. Folks, that's phenomenal. What if you were hedged all the time? You would be up 33.5%, while the S&P is lagging at 22.9%. But this long-short ETF here, this hedged ETF, we're hedged all the time. And don't forget, our hedged portfolios were down maximum 5.2% last year, while the S&P was down 19.6% and the QQQs were down 34%. So there's something to be said about hedging. And recently, what we've employed is a intermittent hedge. When our indicators turn down, we hedge. When they turn back up again, we get rid of our hedge. So we're trying to be hedged in certain circumstances, but yet return something like this. And don't forget, folks, we're having a phenomenal year. We're coming off a bad year from last year. This year, stocks are really doing double what they usually do in a good year. So don't take these numbers as truth that we're going to get them every year, because we're not. But let's look at a few things. First, let me show you some quick charts of what the semiconductor is doing. Look at this rise in here, folks. I remember we were discussing a couple of weeks ago about this 200-day moving average in here, which is the red line, and we could see that the indicator down here was starting to turn down, and then all of a sudden it broke through, and we got rid of our hedges. We had hedges in here for a little while, got rid of those hedges, and I'll show you why in a second. And this thing is off to the moon, just like the rocket ship in the beginning of this video. And let's look at the technology, and you'll see the technology down here actually did cross over, and that's when we put our hedges up. And then when it started turning around, and let me go back to the semiconductor, when it turned around, this one never did go below, the black line never did go below the red line. So back to the technology, as this started turning up, then we got rid of our hedges right around in here. So we had a nice ride without the hedges. So we were not hedged in here at all, and we got a nice rise, even though we did go to hedges for just a couple of days in there. Very, very nice. The timing of the indicator worked out very well. Now, let's look at the QQQs. Yep, the QQQs came down. They actually turned down and gave us a sell signal down here, but that was reversed, and boy, this started to go up, and that's when we got rid of our hedges in here, and that was a very, very good move. So let's go back again. What if we put those three together? We put the QQQ portfolio together with the XSD and the XLK. We got rid of the duplication in some of those stocks, so we didn't have double the number of stocks in one particular stock than we did in another stock. Even them all out, we would have been up this year in fact we are up 80.4% for this year. If we were hedged all the time, we'd still be up 33.5%. But what about an intermittent hedge? And folks, we would be approaching this number. Again, this is a very, very good year. So don't get too cocky in here that, wow, we're going to see the same thing next year. This market's going to take a break. It might even out for a while. It might slow down. You know, just in a couple of weeks, well, here we are in the middle of December, but in the middle of January, 1 month from now, they're going to start coming out with the fourth quarter earnings, and we'll see what the market how the market reacts. But don't forget, the Fed said that they're going to probably lower interest rates 3 times in 2024. That's good for the market. It's an election year. That's good for the market. So, folks, we might have a long way to go and a good year next year. So we want to get into the best portfolios. And I've been asked which are the best portfolios, and they'll be coming out in about a week or two, and we'll see what happens from then, because we'll be loaded with the best stocks going into 2024. So, folks, we had a really, really good November, a really, really good beginning to December here, and we want to see if our QQQ top stock portfolio can break 100%. That would certainly be a record for us. In fact, we're in record territory right now, because in the 22 years that we've had actual portfolios, we've never had 100% in 1 year, not even close. So up 94% in that 94.5% in that one portfolio. We're loving it. Okay, folks, good month and a half, good year altogether. Go out, enjoy yourself, take a walk, be with your family, be with your friends, watch TV, do whatever you want, because the markets will be open Monday one more time, or once again, and we'll go from there. So, folks, okay, good weekend. We'll see you on Monday.